Hey there, freedom lovers. Welcome to this episode of the Mortgages and Mimosas Podcast, where we inspire single women just like you to buy their first house and start building wealth. Now, y'all know if you're here, if you've been here before, or if you're new, now you're going to know. I absolutely love real estate. So whenever anybody talks about buying their first house, I get super excited. I get so pumped. And so I spend a lot of my time in forums for first time home buyers just so I can answer questions when people are trying to buy their first house. And the question that I see the most is this. I want to fix my credit score to buy my house. So how do I go about do that? What do I do first? And when people chime in to answer this question in the forums, whether it's Facebook, Reddit, wherever, you know, a lot of the advice that I see is actually not correct. And of course, this advice that's being given is not with bad intentions. Nobody wants to give somebody bad advice or incorrect advice on purpose. It's just that we don't know what we don't know, right? So let me know in the comments, when you were in high school, did anybody teach you about credit scores? When you were in high school, did anybody teach you about buying a house? And so the things that we know are just from what we hear in the streets or from family or friends. And they heard again from the streets or family or friends. And so there's a whole bunch of misinformation out there when it comes to credit and buying a house. And so in today's episode, I'm going to walk you through 3 things that I see a lot in the forums that people think are true, which actually are not. So, if this is the first time that we are meeting, my name is Nobu Musekiwa, and I help women go from frustrated and overwhelmed with their credit to excited and confident to apply for their first mortgage and buy a house. So, that sounds like you. Make sure you join my next live webinar so you can confidently buy your first house. The link is in the description below and in the comments. Now, first things first, I think the thing that I see the most is about collections. Um, Before I get into that, actually, let me know in the comments, when do you plan on buying your first house and where do you plan on buying this house? I am curious. So, something that comes up in the forums a lot is people saying, "Hey, I want to buy this house, but I have this collection, so I cannot buy a house." So there's this belief that if you have any collections at all on your credit report, that you cannot buy a house. And let me tell y'all, the last house that I bought, I had multiple collections on my credit report and I was still able to buy that house. So let's talk about exactly when it may or may not affect you when it comes to getting a mortgage. So let's first level set on what a collection is. So there are collections and there are charge offs, and I'm talking about collections specifically. So charge offs is when, for example, you owe anybody, well, a lender money. So let's say it's Chase, you owe Chase money, you haven't paid them. What happens is after like 6 months or so or of continuous late payments, Chase closes that account. They still keep that account, and you still have a balance on that account, and they keep reporting it as a balance owed. That is a charge off. When the person, when the not person, keep saying person, when the company or the lender that gave you that money still owns that account, that is a charge off. So if you look at your credit report and you see the name of an actual bank that gave you money, it is a charge off. After a certain time, some banks don't want to keep holding that. So they actually sell it to another company. And that is when it now becomes a collection. So if you owed Chase money, but now it says, for example, Midland Funding, you owe Midland Funding money, that is a collection. So you absolutely can buy a house even if you have collections on your credit report. But here are the caveats as to when it may or may not impact you being able to buy a house. So the first thing is when you actually bought this house. My mind is not in the right place today. Excuse me. The first thing is when this collection actually happened. Excuse me. So when lenders are qualifying you for a mortgage, they are going to look at your credit report and they are most concerned with what happened in the last 12 months. And then they go a little bit further as to what happened in the last 24 months or the last 2 years. So the most important bit is what happened in the last year. So if you have a collection account that got onto your credit report in the last 12 months, that is absolutely going to impact you being able to get a mortgage. You may not be able to get one, or they might need you to do something with that collection first. Um, if you have a collection account that is 4, 3, 5 years, 7 years, that is less likely to impact you being able to get a mortgage, and you may be able to slide through with no issues. Um, there also are going to depend also on who your lender is and specifically who your underwriter is. So if when you are getting a mortgage, you're going to talk to your loan officer, and then on the back end, there's someone that actually digs into your financial information extra hard to make sure that they really want to give you this money. And so if an underwriter is looking at your file and there's this collection and it's on the newer side, depending on the institution, they might be more strict about about letting it go through. And so a specific lender might require you to pay that collection off before you move forward. But for the most part, if that collection is more than 2 years old, it is not going to affect you. If it's within the year, you definitely want to get rid of that for sure. And I will link to, if you check the description box, I will link to a couple of videos that can help you to remove this collection, so you have a better chance of getting this mortgage. So now, something that comes up again related to mortgages is this idea that you have to pay all your collections before you're able to buy a house. And like I told y'all, the last house that I bought, I did have collections, and one of them was not paid off at all. And so the thing that's most important, guys, is when does this collection happen? And so if the collection happened 5 years ago and there's a balance on it, as long as it's not reporting on your credit report as a monthly payment, your lender is probably not going to care. What they're most concerned about is when did this collection happen? So if you're saving up to buy a house, don't take your money and just pay a collection because you think that you need to pay it off to buy a house, because you really don't. You'd rather take that money and stack it towards your pile of savings for this house. And then if the lender tells you that you need to pay the collection, then go ahead and do that. But don't spend all this money paying off things that are not necessarily going to help you to buy a house. And a lot of people pay that collection off because there's this belief that if you pay this collection off, it's going to increase your credit score. And that is not correct. If you have a collection on your credit report and you want to increase your credit score, you need to actually remove that collection completely. Paying it off is not going to improve your credit score at all, specifically your credit score to buy a house, right? It can improve your credit score for other types of credit scores, but there is a specific type of credit score for your mortgage. You specifically want to look at your FICO 5, 4, and 2. And that is what is going to determine whether or not you get a mortgage, and paying off your collections without removing them is not going to help you with that. So you can absolutely buy your house with collections. Do not let collections hold you back, guys. You can buy a house. Let me know what questions you have. I am checking the comments. And let me know where you are watching. I am curious. And if you're finding this helpful, go ahead and tap that like button. No, I'm asking for a lot right now. Most importantly, just let me know where you're watching from. So the second myth that a lot of people think is true in these forums that I'm in about home buying is this idea that you need a high credit score to buy a house. I was actually talking to a friend of mine a couple of days ago, and he said, "Yeah, I can't buy a house. I don't have a 700 credit score." And I'm here to tell you, you do not need a high credit score to buy your first house at all. So what credit score you're going to need is going to depend on the type of mortgage that you are getting. And for most people, like the most common types of mortgages for first-time home buyers in America is an FHA loan or a conventional loan. About 70% of loans that are done for regular houses or FHA or conventional. For an FHA loan, guys, your credit score only needs to be a 580. That's it. Like 580 credit score will get you into our house. For a conventional mortgage, a 620 credit score will get you into a house. Now, what type of mortgage you can get is going to depend on your credit profile. And so when you speak to a lender, they'll let you know whether or not you can qualify for an FHA conventional. And like the things that will disqualify you from an FA from a conventional mortgage is like certain things on your credit score, where if let's say for example if you had a foreclosure recently, or if you had like a repo recently, if there's certain big derogatories, it'll bump you out of being able to get a conventional loan. But it, in terms of like you getting into a house initially, speak to a lender, ask them what you qualify for, and they will let you know whether you can get an FHA, a conventional, and what the difference is in terms of the interest rate. There are other options as well where you don't need where any credit score at all can get you in. So, for example, if you qualify for a VA loan, you can get in with whatever credit score you have, as well as if you go through NACA, for example, you can go in with whatever credit score. So now, of course, higher credit scores are good because if you have a higher credit score, then you are going to have a lower interest rate, which means that when you're borrowing this money for your house, it's going to cost you a lot less. So yes, having a high credit score is good, but having a lower credit score does not take you out of the game whatsoever. And so if that is the only thing that is holding you back, definitely talk to a lender and see where you lie exactly. If your credit score is lower than a 580, or if it's, if you want it higher, I do have a course. I'll walk you through what to do specifically for a mortgage to help you to get that up. So go ahead and check the links in the description box if you're interested in that. If you are finding this helpful, go ahead and tap that like button, give it a little love tap. And yeah, drop your comments if you have any questions. Another common myth, which actually is like very, very, very common, I fell for this one as well, is this idea that you can use whatever free app to track your scores when you're getting ready to buy a house. I was using Credit Karma myself. So for a little bit, I had a bad credit score and I was working to fix that. And I was tracking using Credit Karma. So every time I would do something, I'd check Credit Karma and Credit Karma would say, "You're doing great. Your score is improving. Awesome." And I was so excited. And when I went to apply for a mortgage for my last house, I was very confident that I was going to get this mortgage. I felt good with my 680 credit score because Credit Karma told me I had a 680 credit score. And when I applied for this mortgage, the lender actually told me that I could not get a mortgage at all because my credit score was actually a 525. And your girl was surprised because Credit Karma was telling me that my score was good. So this is why I learned about the mortgage scores the credit scores that are specifically used for mortgages. So if you're buying a mortgage and you think that the score you're looking at your bank or at Experian or whatever app you're using, it is not the right score unless you're specifically using the My FICO app. So myfico.com is where you can find your mortgage credit scores. You're going to want your FICO 5, FICO 4, and FICO 2. And sadly, you do have to pay for my FICO, and you do want to be able to look at all three scores because when you are buying a house, the lender is going to look at all three of your mortgage scores, and then they are going to use the middle score to determine what your interest rate is going to be for this mortgage. And so if you're just looking at one score, your one score could be, let's say, 7 something, and then your middle score is actually like a 650, and that does happen for sure. So you might be thinking, okay, I'm going to get the best rates, but then you go in and your middle score is actually going to bring you down to a lower tier. So you want to be looking at the right scores, and you absolutely want to be tracking the right scores, because some of the things that you might be doing to improve your credit score could impact let's say, like, if you're looking at Credit Karma, it could impact your Credit Karma and look like you're doing great, but then like nothing's happening with your FICO mortgage score, or vice versa. You might do something and Credit Karma is showing you that like your credit score has tanked, when realistically your actual score for your mortgage is like doing completely fine. And I'm a little bit OCD. I check Credit Karma. I use Credit Karma, Wallet Hub, and my FICO that are there. And then I also have my free numbers that come in from my banks and such. But the main three I use are Credit Karma, my FICO, and Wallet Hub. And so I see the variances in like when I do this thing, it impacts Credit Karma this way, but it does the opposite to my FICO. And so you really want to be tracking the actual thing that is going to be used to get this mortgage, right? So Credit Karma doesn't even have a FICO score. It's a completely different scoring model, which at this time lenders are not using. So I absolutely will drop a link to the My FICO website in the comments or description box, so you can go ahead and take a look at that. What comments do y'all have? I'm checking what questions do you have? Excuse me. Let me know. Awesome. All right. These are so these are just a few of the things that I see that are that uh, are things about credit that people think are true that are not true when it comes to buying a house. There's obviously a lot more. If you have any questions, if you have something that you think is true when it comes to credit and buying a house, drop it in the comments, and then we'll play a little game of myth or fact. Because I'm curious what it is that we think is true that is actually not. Now, I told y'all earlier that before I knew about these FICO mortgage scores, I actually was using Credit Karma to work on my credit score. And I also was like in these same forums that I'm talking about. I was in these forums for buying houses. I was in these forums for like fixing your credit score specifically. And it was just these general forums. And some of the things that I was doing, just I thought it was going to be helpful to fix my credit score, specifically to buy a house. And I was doing all these different things, sending the dispute letters, sending the 609 letter, like contacting the CFPB, like all these different things and tricks and templates, all that stuff. And I was using Credit Karma, and I thought I was doing a great job, but when I actually looked at the numbers for my actual FICO mortgage scores, in 5 years of me trying to work on this score, my score went up by 60 points, which is not great, of course, because I know you want to buy that house soon, and you don't want to wait 5 years and like not even, put a dent in your score. So I went from a 460 something to that 520. But once I actually learned about my FICO, when I learned about the specific mortgage scores, I was able to increase my credit score for my mortgage by 160 points in 5 months. So it really makes a difference when you're looking at the right thing. And I'm going to link to a video somewhere here that walks through exactly what I did to get that huge jump in 5 months.